Right? So welcome to the Trader Career Track of PJFIS 2021. The future starts now. So if you want to post about PJFIS 2021, the future starts now, do not forget to use the hashtags hashtag PJFIS 2021, hashtag the future starts now, hashtag CFA Society Philippines, whether you are posting in Facebook, Instagram, or LinkedIn. So as a reminder, the evaluation form is available in the CFA Society Philippines mobile app. We have evaluation form for each day of the PJFIS 2021. So this part of the requirement for you is to be able to get your e-certificate, and you should attend at least 70% of the whole summit or at least 13 sessions to get the e-certificate. Yesterday, you got an overview of the trader role and learned about must-watch market indicators. In our first breakout session this afternoon, Common Pitfalls in Trading, Ms. Cristina Gabaldon, CFA, will share the frequent mistakes made by traders and how they can be minimized or avoided. Ms. Gabaldon graduated from De La Salle University with a bachelor's degree in accountancy and economics. She has over 13 years of market experience. She started her career in Union Bank of the Philippines as a portfolio manager and eventually CIO. She then moved to Bank of the Philippine Islands. She's currently the head of equities of Sun Life Asset Management. She's also a certified public accountant and a chartered financial analyst. She previously served as a board of trustee of CFA Philippines and is currently part of the board of trustees of Fund Managers Association of the Philippines. So let's give a round of applause for Ms. Cristina Gabaldon, CFA.
Hi, everyone. Good afternoon, everyone. Could someone share my slides? There. Okay, so common pitfalls in trading. I guess everyone here is interested in trading and earning from their trades. This is more of an institutional perspective, but you could also apply this in your personal or retail trading. Sige, next slide. So in order to go into the topic, let me first tell you what I think makes a good trader. For me, a good trader has very good market feel. They have a good sense of demand and supply and the value traded for that stock. They trade within the rules and restrictions given to them. So they make sure that they don't breach anything, and if short selling is not allowed, then they don't do such thing. And then they have confidence in their trade. They come up with a plan. Start of day, they know what names to trade in and out of already. And when they trade, they are very decisive. They know what to do, and they can execute the trades with ease. Next slide. So what makes a good trade? There's a difference between the buy side, which is where I am, asset management side, and the sell side. So we view a good trade differently. So in the sell side, the way they view a trade would be, did they follow the way clients instructed them to trade or not? On the buy side, it's about, is the trade planned? Did they consider all the scenarios? Did they consider risk? And the trade should be value adding to the portfolio that we manage. For a buy-side trader, excuse me, for a buy-side trader, they should exhaust all means to make a good trade. For instance, they use facilitation desk. If they can cross large blocks without impacting market prices, then the better. And also, they should be knowledgeable in different trade orders. If it's a wood order, would be happy to be done at the price, or stops. They can use stops so that they gain all the upside but minimize their downside. So things like that. So in Slim TC, that's the department I am in, Sun Life Investment Management and Trust Corp. We actually use implementation shortfall. Implementation for shortfall rather than VWAP. Next slide. So what is implementation shortfall? It's basically when the portfolio managers give the trade to the traders, that is their arrival price or their benchmark. When they calculate how much they realize from the trade, they consider explicit costs. They calculate how much realized loss and delay costs they incurred versus the arrival price, and they also considered missed trade opportunity cost. So like if they were not able to execute the trade, it's as if it was done at the closing price of that day or that period. So the reason why we use this instead of VWAP is because VWAP could be gamed. So for instance, the average of the trader is very good, very low price, and the trader is buying, and then the price of the stock suddenly goes up. The trader could choose not to implement it anymore, but that could hurt the portfolio we are managing. So that's why we use implementation shortfall. Next slide. So let's go to the common pitfalls in trading. So these are the top of mind things that I could come up with. But of course, there are more pitfalls in trading. But let's go through each. Next. So pitfall 1 is trading without a plan. So for instance, last August, ASEN and Converge were added to the PSEI index, and Emperador and DMC were taken out. So for us, at the start of the day, we already had a plan as to how much, let's say, Emperador and DMC we needed to trade out of, and we tried to match the size of, let's say, for our index trackers, we tried to match the size of our selling with the buying of some brokers. That's one example. Also, like if you would look to the right side, you could see how many days traded, how many days it would take to sell DMC and Emperador and buy AC and Converge. So those are important things so that you could sort of gauge if the price of the stock would fall significantly when it's taken out, or if it's included or added to the index, how much it could go up potentially. So okay. Next. Okay. Second pitfall is being the herd. This was a favorite of retail investors. It even became a top 5 traded name during that time. Early part of 2021. The stock is Abra Mining. It's speculated that there is going to be a new investor that will develop its gold mines. And this is unconfirmed, purely speculation. And and then sometime March, the stock was halted and suspended indefinitely, and until now is suspended. So if you were part of the herd, you were part of that huge significant volume you see down there, then that's one pitfall you should be careful about. Okay, next. Okay, third pitfall is being emotional about the trade. If you recall, in March 2020, when well, for us, we were sent home and lockdown started to happen, and news of coronavirus is hitting a lot of countries, and yeah, during that time, index fell to around 4,000 level, and that was an emotional trade, which actually triggered the circuit breaker of the PSE. And well, during that time, those who went into the right index would have made a lot of money by now. Next slide. So pitfall 4, not knowing rebalancing schedules. So this is very important. You have to know rebalancing schedules because our market is very much flow driven. So like for the PSE, you should know that rebalancing happens in Feb and August. For August, yun yung AC Converge addition and removal of DMC Emperador. For MSCI, it happens Feb, May, August, and November. You should know that May and November are where the additions and deletions happen. So actually, May 11 in the evening, there's going to be an MSCI announcement as to additions and deletions. We'll get it by tomorrow morning. Speculation is that it would be ASEN and possibly Monde to be added. And then FTSE is important as well, so the dates are there, and Wisdom 3 is important as well, but to a lesser extent, less followers on that. Next slide. Pitfall 5 is not knowing corporate events. So if you recall, sometime October, KKR acquired FGen shares, and because of this, FGen's public float would be reduced, which is from 18.74% to approximately 11.4%. And with this, it would be subject to a mid-cycle rebalancing, and FGen could potentially be taken out. So we knew the PSE rules, we knew the corporate event, and so we actually tendered the FGen shares we had, and it turned out well that we did. So it's important to know these things so that you could know how the stock price would react. Next. Okay, pitfall 6, selling winners and holding on to losers. So for this example, I just chose ASEN, which is a significant outperformer, and then Cebu Pac, which is challenged by lesser travels because of the pandemic. So if you look at the stock price there, if you had this psychology in mind, then you would have sold your ASEN early on and held on to Cebu Pac, for instance, because you haven't broken even yet. So that's a pitfall you should watch out for. Next slide. So this one, pitfall 8, over trading. So if you're buying and selling, it would cost you 119 basis points or 1.19%. When you buy a stock, it would cost you 0.3%. And if you sell a stock, it would cost you 0.9%. So it depends also on the type of trend in the market. If it's an uptrend, then maybe a buy and hold strategy would be better. In downtrend, maybe it's better to sell and maybe buy in the future. Sideways, maybe you'll make more money with trading, but when you trade in and out of a stock, you should be cognizant of the transaction cost, because in the Philippines, it's not cheap. If you look at it in the selling part, there's significant sales tax there of 60 basis points. So compared to the region, yeah, we're expensive actually. Okay, next. Pitfall 9. I think go back. Could you go back? Could you go back one slide? Okay. Yeah, okay. Pitfall 9. Go ahead. Okay. Yeah. So coming to a hype. Dito naman tayo sa crypto. I'm sure a lot of you or the younger generation trade crypto now, but there was one crypto that was launched recently pertaining to the hit show Squid Game, and its market cap actually reached $2.168 trillion, and then it was really hype, and then value went down to zero because it was actually a rug pull, and that's the thing. The Squid Game token was created in PancakeSwap. Use case we don't know, but because of the hype in the name related to the popular hit show, people went into it, and it was a rug pull. People lost money. So there. Next slide. And that's it. So I'm open to Q&A.
So thank you, Ms. Gabaldon. For the Q&A portion of this session, may we please call on Mr. Bret Urmeneta, CFA, Account Officer and OIC Head of Institutional and Personal Management, Trust Department of Security Bank Corporation, Trust and Asset Management Group.
Hi, Bret.
Hi. Can everybody hear me? Yeah.
Yes,
Hi, Miss
I
Gab.
hear you.
Yeah.
I can't see you though, because you're merging with your background.
Shucks.
But it's
Wait
okay.
lang. Stop ko lang yung background ko. Yeah. Wait. Ano lang, there. Sorry, nag-mixed up yung background ko. Yun, Miss Gab, thank you for that very informative discussions. Ano yung mga common pitfalls for trading, no? And I'm sure a lot of our students here, we're around 174 attendees, no? So we're quite a huge number of participants. I like what you said, Miss Gabs, na especially yung when you mentioned about not being too emotional on your trades, especially what happened on pandemic when the circuit breaker in the stock exchange was triggered by the stock local boards. I think more than twice, no? Thrice ata nung na-trigger yung stock breaker, and a lot of people were cutting their positions also. While it should be the best opportunity, diba, to buy the market because the market is really cheap, diba? So madami yung fearful also, diba? I remember that time personally, although I knew exactly na it was an opportunity to really position in the market. Pero that time I was emotional, I was fearful, I was holding on to cash. So what I did, instead of going into the stock market, I held on to the cash. So nag-money market fund ako noon at that time. So ngayon, yeah. So I lost the opportunity nung pumalo ng stock market. Ngayon, it's hitting the 7,000 level, no? And
Sabi
probably
nga nila,
7,500,
diba?
8,000.
Buy when there is blood on the street.
Yeah, exactly. Ayun. Ito may question, Miss Gabs, from our students here. One question is about rebalancing. You mentioned a number of times na we have to be very knowledgeable on knowing about the rebalancing schedule. What you mentioned kanina, si Gabaldon Glenn from University of San Carlos is asking, is the rebalancing period dependent on the PSEI, MSEI, or the company's own balancing period?
So
can you talk more about? Yeah, okay. Yes, ma'am.
So like we have index trackers, no? I'm sure in Security Bank you have as well. In Sun Life we have as well, and we follow the PSEI rebalancing. Yung MSCI, a lot of passive foreign investors follow that one. And yeah. So our own rebalancing period wherein we track a benchmark, wala naman in the active funds. But for index trackers, yes, we follow the rebalancing periods. Yeah.
Correct. I think a lot of students listening to our discussion, Ms. Gabs, I think most of them hindi masyadong alam about the rebalancing eh. So sometimes when they see yung fluctuation ng stock prices, hindi nila alam na yung hindi siya like a fundamental event na nagkaroon ng sudden plummet or sudden drop ng stock. For example, what happened to Converge, diba, when it was added to the PSEI, pumalo yung presyo because not of fundamental event, but because it was added to the PSEI.
Yes. So very flow driven sometimes eh. So yeah. So yeah, it's really demand and supply, and right now I would say the industry is dominated by index trackers. And so this becomes important too.
Yes, ma'am. Correct. And also dapat tayo masyadong up to date sa news, no? Kasi I remember when the Converge name was added to the index, the stock market, the PSEI suddenly changed the rules, diba? Si Converge na hindi naman siya for a long time yung rules on the adding naming the index. Like recently, like IPO lang si Converge, but suddenly they changed the rules. And
before it has to be listed for a year, but now they changed it to 6 months. Actually, Monde is speculated to be an index addition.
Yeah, I heard.
Feb. So because of
the capitalization din malaki.
So watch out for announcements like that because it could be a boost for certain stocks because of the change in rules. Yeah,
agree. One thing, Ms. Gabs, you mentioned about pitfall number 2, being the herd. Isa sa mga pitfall. I think a lot of us are very guilty on following the herd mentality, no? So question is, how do we avoid getting into the herd mentality?
How do we avoid? I guess
Yes.
on our end, you can see if something is a crowded trade already. All analysts are recommending it. You look at the target prices and then versus the price now, sometimes over na. Then you know it has gone beyond fundamentals and the crowded trade, it's a herd thing. Diba?
Mm-mm.
So like that Abra mining example, there were other names during that time that were really trading, and it's more of speculation driven. Yun nga
Mm-mm.
sabi nga nila, pick your poison nung time na yun.
Oo, oo. I remember Miss Gab, parang last year, Now Corporation, it was a big name in the market. A lot of retail investors were talking about it. Then suddenly, bumagsak yung presyo.
Oo, yeah.
So, yeah, herding.
Maraming names nung time na yon na retail driven but you don't really know why.
Okay, so you mentioned about really study the name, compare the target price with the current price.
Yes.
Yeah. Okay. We also have more questions from the chat box now. So guys, just keep posting your questions para we can make this conversation very alive. Ito, hi ma'am, is there any strategies po you can recommend in evaluating risks?
In evaluating
From Thea, TIP Manila.
I guess when you're managing a portfolio, you don't want to be too concentrated on a name. You look at volatility of the stock. You look at beta of your portfolio. Sa atin, sa buy side, very conscious tayo of the benchmark. So you look at your tracking error or active share versus the benchmark, di ba?
Yes.
If you are deviating a lot from your benchmark, then you should be delivering a lot of alpha as well, di ba?
Yeah.
Things like
that.
Oo. So, yeah, those are the things we look at. Kung technical side, we look at the, you could say the moving averages. Kung let's say, kasi the moving averages serve as a support and resistance. Kunyari, you're in between the support and the resistance. Kung the stock is trading closer to the resistance, then you're taking more risk there kasi kung hindi niya na-break yung resistance, bagsak mo sa support.
Yeah, agree. How about Miss Gabs, for example, a lot of students dito are about to build their portfolio pa lang. So, for example, I'm a student and I have a money from my parents na I want to put in stock market, and you mentioned about concentration risk on name, diba? Ano yung recommended percentage mo, ma'am, Miss Gabs?
It really depends on the person. It depends on the money you're playing with. As a student, you guys are very young.
Aggressive, risk taker.
Aggressive. You can make mistakes and learn from your mistakes.
Yeah.
Like I remember when I was a lot younger, I bought into a speculative name, made big money there, but kunento ko nga sa more experienced friend ko at that time, and then sabi niya, I don't think that's the lesson you want to learn. You made big money on a speculative name. So do what you want to do. You guys are young. You learn from your experiences. Yeah. That's the best way to get to know yourself.
Yeah. I think, Miss Gabs, one good thing about this era, meron kasing mga online training platform for trading, no? Like, you can have dummy account, tapos pwede kang maglaro doon, wala kang masyadong perang, walang actual na money involved. Like, it's a trading game. I did that before. When I started getting interest in stock market, before ako position, naglaro muna ako, parang it's an online stock gaming application.
May opinion ako dyan. The thing with that,
yeah, go ahead, ma'am. Go.
with that, it's a game. It's not real money. So in order to win a game, you take huge risk. But in reality, it's not something you would do. Diba?
Oo.
To win
Pag
the game,
actual na.
wala naman yun eh. You just take the biggest risk, earn the biggest return. Pero yeah, it's different when it's your money or you're managing people's money. But it's a good way to trade, yeah. Simulated.
Pag nasa institutional buy side kasi, or in sell side, di ba, we take more precaution on our trading kasi may mga limits eh. May mga single name limits, sector limits, depende sa investment policy statement, and we're managing people's money. So very cautious compared to personal money.
That's true.
Yeah. Okay. We're down to the last two questions. I'll get questions from Seth. Meron siyang tatlo. I think the second question, this was answered already. What do you do when you're too emotional? The first question, in a market where opportunities are endless and trading setups tend to transcend almost every day, how can we limit or better yet avoid overtrading?
How do we avoid overtrading? Actually,
buy and hold ka na lang.
I think buy and hold. Some really make money from trading in and out. Sa buy side, it's more difficult given the size of the portfolio and given the malaking portfolio kami. Well, malaking portfolio kami and overall market liquidity, we trade 7 billion to 10 billion per day. I cannot churn enough to make it material to my portfolio. So maybe sa retail, mas may opportunities, but in the buy side, lalo na kung malaki kayo, di ba? How much could you trade? Diba?
Yeah.
I'm sure you know that.
Yes. And alam mo, Miss Gabs, very helpful yung slides mo kanina when you presented yung stock transaction costs that comes with the trading, di ba? Kasi I think a lot are unfamiliar yung costs associated with trading kasi akala nila buy and sell lang, okay lang, walang associated cost, but little did we know na ang mahal pala, no?
Oo, because of the sales tax rin when you sell.
Sales tax, may commissions pa yan, may VAT. Yeah, broker's fees, madami yan. Yeah, so sometimes yung buy and hold strategy works better than trading kasi in the long run, di ba? Minsan yung profits mo ma-eat up ng mga costs on trading.
Costs.
Yung frequency. Yeah.
That's correct.
Okay, one question, ma'am, from Seth again. One of the best tools of trading is journaling each and every trade for future evaluation. Do you include journaling your emotions as well in your journal?
Hindi ko nasubukan yan, pero that might help para kung babalikan mo yung, let's say, bakit ako nagkamali dito? What was I feeling?
Yeah.
Yeah, maybe you can learn from that journaling. I have not tried that, but it might be a good idea.
Yeah.
Okay.
Sometimes kasi pag emotional ka, sometimes you just need to breathe and distance yourself from your computer kasi baka magbenta ka dyan eh.
Oo, diba? Baka mali magawa mo.
Mali magawa, correct.
That's why it's good to have a plan para hindi ka driven by emotions. You have a plan. You have target prices. I will sell at this price. Alam mo na eh. So, it's better that way than, umaakyat. Bibili na ba ako? Diba?
Yeah.
Or the other way around.
Oo. So, ikaw, Miss Gabs, pag nagpa-plan out ka for your trading, ano yung usual mga tick marks mo? Number one, you mentioned about the target price.
Yeah, the size of my trade. Kung, let's say, rebalancing, how many days to yung expected to buy a name or to sell a name.
Meron kang stop loss limit?
Wala. We don't have a stop loss limit. Sometimes it's counterintuitive kasi bumagsak na nga. And if you really like the name, bibili ka naman, sa amin naman, bibili ka because of fundamentals, not because of anything, di ba? So if you have a stop loss limit, you should be buying the name more nga, bumagsak, rather than unwinding it at the bottom.
Oo. Correct. Okay, I think we have 5 more minutes based on the schedule. No. Do we have more questions from our students?
I see a question.
Okay. Ayun, ma'am. Yeah. How do you avoid analysis paralysis? From Simon Christian.
How do you avoid it? I guess you really have to pull the trigger kasi maiiwan ka lang yan eh. Kapag analyze ka ng analyze pero hindi ka naman gumagalaw. And it happens, yeah. I've seen that happen to the very best analyst rin na parang, so ano yung recommendation? The recommendation, di ba? So, yeah.
Oy, ang daming nagpa-pop up na questions. Ayun, from Danica, is it better to cut loss or to hold?
Depende. Anong reason for cutting loss? Is it fundamentally driven? May mas namang nangyari? Talagang the drop in price is warranted? Maybe. So maybe it's time to just to realize losses and move to a better name. Kasi if you hold, kung there's no reason for the drop, yeah, sure, hold on to the name. Pero if there is something fundamental, yeah, you might want to get out of, I don't know, corporate governance related or who knows. Diba?
Yun, from John. Any tips po for scalping and what types of stocks best for it?
What's scalping?
Not sure eh. John, can you explain more about scalping? Anyway, while we're waiting for the chat of John on yung scalping, let's move on to Sean Ray from PUP. Yung question niya is, a stock's removal from an index is not necessarily an indicator to not buy in that specific stock, right?
Yes, correct. Like yung iba, kung natanggal yung name, kunyari, Emperador, pero fundamentally it's good, pero natanggal siya sa index, opportunity yon for active funds to buy into that name. Kasi binagsakan not for fundamental reasons, but natanggal siya sa index maybe because of liquidity or number of yung average daily value traded.
And follow-up question niya, in reference to what happened to the stocks na na-remove, DMC, STC, Emperador. After the removal, the prices gapped down and eventually went up a few weeks later. What's the rationale behind it?
Yung DLC, syempre nung it was taken out, bumagsak, but it went up because of coal prices going up. So it's a fundamental reason. So yeah, so earnings niya have been good. That's why. Even
Ayun. Yeah.
addition and removal of the stock, important siya for that day. It's a trading thing. Pero on fundamental, syempre ibang story na yon.
Okay. Miss Gab, ito na yung scalping. It's buying and selling on same day. Ano na yung type of stock for it? If you want to buy and sell same day.
Same day. Edi piliin mo yung mga volatile stocks.
Yeah. Mga mga basura stocks.
Well, volatile. I said volatile. Well, kayo kung gusto niyo bumili basura stocks, but yeah, the volatile, syempre kung volatile magalaw, you can do intraday.
Yeah. But extra careful lang on the fees.
Yeah. Yeah. Kung intraday, yung malaking inakyat o malaking inakyat, yun lang naman intraday mo eh. Because of the fees.
Yeah. Ayun. I think we're down to the last question. We're 3:54 p.m. We're down to our last minute. Ito, thoughts about trading basura stocks, ma'am, and how do you trade it po, if ever? Grabe naman yung term.
Stocks, but I guess konti lang ilagay mo with the basura stock.
Yeah, correct.
I mean,
no,
the risk you are taking. Pag basura stocks, I don't think you intend to hold it very long. So don't be greedy. Kapag medyo tingin mo kumita ka na, then get out.
Yes. Agree, Miss Gab. Okay, there you go. I think we had a very fruitful conversation with Miss Gab, and I hope a lot of our students were able to get a lot of insights, information from this discussion. And we hope everyone in your career, you might want to take a second look on trading, taking inspiration from our speaker, Miss Gab.
Thank you.
Back to you, Paul.
All your questions. Bye.
All right. So thank you, Ms. Gabaldon and Mr. Urmeneta. As our token of appreciation, we present to you the e-certificates. Okay, so CFA Society Philippines presents the certificate of recognition to Ms. Cristina Gabaldon, CFA, for her valuable contribution as speaker on the topic of common pitfalls in trading at the Philippine Junior Finance and Investment Summit 2021, The Future Starts Now, given this the 11th of November 2021. And then CFA Society Philippines presents this certificate of recognition to Mr. Bret Urmeneta, CFA, for his valuable contribution as moderator on the topic of common pitfalls in trading at the Philippine Junior Finance and Investment Summit 2021, The Future Starts Now, given this the 11th of November 2021. So thank you, Ms. Gabaldon and Mr. Bret Urmeneta. And then now,
it's a pleasure. Thank you. Bye-bye.
Thank you. And then now let's just have a quick photo op. So if we can very quickly turn on our cameras for the photo op. Okay, so can we just very briefly turn on our cameras for the photo op session?
Okay, 1, 2, 3.
All right, so We're going to have our 10-minute break. But if you have not downloaded and installed the CFA Society Philippines mobile app, please do so now. So for your questions, please see the prepared list of FAQs available also in the app. And if you want to post about FIS 2021, the future starts now. Do not forget to use the hashtags #PJFIS 2021, hashtag the future starts now, hashtag CFA Society Philippines, whether you are posting in Facebook, Instagram, or LinkedIn. And as a reminder, the evaluation form is available in the CFA Society Philippines mobile app. We have evaluation form for each day of the PJFIS 2021. This is part of the requirement for you to get your e-certificates, and you should attend at least 70% of the whole summit or at least 13 sessions to get the e-certificate. All right, so see you in 10 minutes. Thank you.
Why choose the CFA?
How has being a charter holder helped my career?
The confidence that it's given me in my own analytical ability.
Being a charter holder has broadened my perspective.
My understanding of the industry is much better than before.
You gain a broad understanding of a lot of different subjects.
And it's made me more confident in the work I do.
Instant credibility from my peers.
I can go to a different country, I will meet people who have the same qualification, who understand what I've done to achieve it.
It's a global program, so you can speak to someone who's a charter holder from India or from South Africa, and they understand you.
It feels good to know that it's quite valuable for employers in the industry.
My belief that I can achieve anything.
So I think being a CFA charter holder helps me to communicate with my clients in a language they understand.
The CFA gave me a lot of information that I had not learned during my economics degree.
The amount of knowledge which you get is so diverse.
Something I didn't know when I started the program was how important the ethics portion was. I realize now that it really sets the standard in the industry in terms of practices.
I can speak the same language with hundreds of thousands of investment professionals.
A deep knowledge, understanding of the financial market.
It is wanting to know how all the pieces fit together.
Because it really does open a lot of doors within the financial industry.
I learned to be patient, focused, dedicated.
So when you get those letters after your name, it's a pretty good feeling.
Having a CFA on my name card gave me a huge advantage, especially as a woman, because when I walk into the room, he immediately knows you mean business.
It's not an easy process,
but nothing's impossible.
It was a lot of sacrifice, but it's worth it.
I felt that I did a very, very big achievement.
And it made me feel proud.
I'm very, very, very proud.
I'm very proud of the achievement.
I'm very proud to be a CFA charter holder.
Let's build a better world for investing.
Let's lead in improving the quality and standards of the financial profession.
Keep your abreast of financial innovations here and abroad.
Be known for integrity and professional excellence.
Let's always put investors' needs above our own. Push for financial literacy.
Provide service to the investors through the selection of the best managed funds of the year.
Let's build trust in our industry.
Advocate on behalf of industry issues.
Convince trust and asset management companies to adopt the Asset Managers Code and the Global Investment Performance Standards.
Let's put ethics at the heart of everything we do.
Talk about ethical decision making.
Encourage ethical behavior and be really passionate about it.
Create an environment where investors' interests can serve.
Markets function at their best and economies grow.
For the ultimate benefit of the Philippine society.
I am Chris Arceo.
Mark Yu.
Erwin Ocampo Avante.
Rob Ramos.
Sandra Aralia Gonzalez.
Mark Ilaw.
Kate Burgos, and I am CFA Charter.
We measure
up. Join us. Let's measure up.
Okay. All right, so welcome back, everyone. So we are now down to the last session of the day. So in their fast-paced world, traders need to deploy risk management techniques to avoid losses from spiraling out of control. In our next session, Mr. Ricky Maddatu, CFA, will share how traders manage risks to support their profit-taking activities. Mr. Maddatu is a finance professional with over 14 years of experience in the capital markets, with posts in sales and marketing, asset management, and treasury. He started his career as an investment specialist, marketing mutual funds managed by APR Kim Eng Asset Management, or ATRAM. He then moved to become a fixed income and multi-asset trader and fund manager in the same institution. Afterwards, he joined Metrobank, where he served as a senior trader and eventually the head of the credit trading department, heading both the sovereign and corporate credit trading responsibilities of the bank. Currently, he is the head of fixed income of True Life UK Asset Management and Trust Corporation. Ricky was recognized as one of the most astute investors in local currency bonds in Asia by the Asset for 2011 and 2013, and one of the most astute investors in Asian G3 bonds by the Asset for 2015 and 2016. He is a frequent lecturer in the seminars organized by the Money Market Association of the Philippines, ACI Philippines, Wealth Management Center, as well as for the CFA Level 1 review classes of the CFA Society of the Philippines, focusing on economics, fixed income, and portfolio management. Mr. Maddatu graduated from the Ateneo de Manila University with a degree in development studies, and he is a CFA charter holder. Let's give a virtual round of applause for Mr. Ricky Maddatu, CFA.
Hello, everyone. Good afternoon. I'm really glad to be here and really glad to just be able to share on our topic for this afternoon. So maybe we could show the slides already. There you go. Okay. So again, my name is Ricky Maddatu. So maybe you could just go to the next slide. And just to give you a brief background and probably provide you a roadmap. I think one of the more important things that you could get from summits, just like this one, is really to glean from the overall experience and really the career path of the speakers that you are faced with. I know as students, looking back, actually in a few months, I'll be officially I've been working for around 15 years already. So I think just a few months to go before I reach that milestone. It's quite, just looking back, it's such a very rich experience. To be honest, I've never seen myself being part of the finance industry when I was in college. Mind you, when I was in Ateneo, I was, in a way, I was not really dead set on a career path. I was thinking of taking up law. I was thinking of just really winging it after college. I mean, I'm not the type that was really planning on a certain long-term path. But then again, I think it's really serendipitous, to say the least, that I found myself in the finance industry. So just to give you a career background, I started with ATR Kim Eng. Actually, before even getting into investment management, I was part of the sales and marketing team. So back then, I had no idea what a bond was, or equity securities, or even the stock market. Very little idea. I think my boss just took a chance with me. It's really finding that mentor that really did a lot of difference in my career. I started as a liquidity manager. So it sounds very technical, but it's really just calling banks and placing time deposits and just making sure that the trades that were being done by the portfolio manager and the traders were being funded. Then after a few years, and it's really a matter of just sitting down and looking and observing, I was able to get the skills, and I was able to really convince my bosses to give me a shot in trading. And it's really more of execution side, so it's not really my decision making at that point. The risk really is being taken by the portfolio manager, and I'm just getting all of the execution order. So I think that's where you'll be starting, especially if you're getting into portfolio management. So mga alipin at the beginning, just really just getting orders and executing them in the market and the best way you can. After that, I was promoted to be a junior portfolio manager. At this point, the risk-taking part is in a way delegated already. So you have your head portfolio manager, your head of the asset class that you are in. It was a multi-asset team then, so equities, fixed income, liquidity, a bit of derivatives at that point. Yeah, there's more of delegation. So there's really a lot of back and forth with the portfolio manager, and really when it comes to decision making, you're like a partner already with the head. So I think that's where the risk taking is being developed. After a few years, I switched to the sell side. So I think that's one of the key things I think that I would say makes me a well-rounded investment professional, being on both ends of the spectrum. So when you say buy side, you're on the trust or the mutual fund industry. Sell side, you're more on the treasury side of things. So I was a senior trader then. I was handling credits. When you say credits, both corporate credit and sovereign credit, both of the dollar and the peso funds. So it's really when you say trading, this is where you have a budget. You want to meet that budget by trading, buying and selling bonds, and really capital gains and coupon income. You just want to be able to meet your targets. So from there, I think the usual progression is for a few years, you'll be on your own. You'll be managing yourself. You'll be being directed by a boss, but eventually you'll become a people manager. I think that's one of the most rewarding things that you'll be doing, and really leading people, leading young men and women. And I got the chance to be a dean of the management trainee program of Metrobank. And it's a very good program. I think for those who are looking into the investment management industry, management trainee programs are one of the best entry points, I think. Very comprehensive and very holistic, in the sense that you'll be toured around the whole spectrum of the different departments within the investment industry. Then I found myself back again on the buy side. So currently now heading fixed income. I'm the lead portfolio manager. So in terms of risk taking, it's the discretion is really on my shoulders. So that's one of the things that I think is very rewarding. At the same time, it keeps you up at night at times. You are already having that heavy fiduciary responsibility. So you know that you're handling the money of these institutions, of these retail investors, these high net worth individuals. So it's both exhilarating and at the same time sometimes very stressful, as you can see with my hair growth or lack of it. So yeah, so that's more or less the career roadmap. So hopefully this goes to show you that it's a climb, it's a whole process, but hopefully in the next few slides I'll be able to share with you the principles and strategies and the mindsets that I've carried all along in order for me to be able to efficiently manage risk. So what does that mean actually? So next slide, please. All right, so one of the greats, you can't go through a seminar like this without having any quotes from the greats. This one coming from Warren Buffett. Risk comes from not knowing what you're doing. So the thing is, when it comes to risk taking, and what you're doing right now as part of the summit is really one of the key exercises when it comes to adding to your knowledge or adding to what you want to pad into your experience. So what you're actually doing is not necessarily going through the same experience of the speakers, but really collapsing time, meaning you would want to get their knowledge or their wisdom through just listening in and be able to collapse the time and get the experience vicariously, I think, with all the stories that are being mentioned. Now, to dissect this quote further, risk springs forth from the process. So you notice here that it's not knowing. And these are both action words, the two parts of the quote. And it's really on the process. So market risk is undermined in this specific quote. I'm just trying to dissect the quote, specifically because it is inevitable. Market risk is inevitable, meaning what's happening in the financial markets will necessarily happen. It will happen. But then again, it's actually a welcome event. Now, the deciding factor really is the trader's process. Really the behaviors and the attitudes that would determine your success as a trader. So again, what is being emphasized here is the process that you're going to carry within the financial markets. And the financial markets is a wild animal. It's like the weather, or it's like the climate. You may have the tools to be able to look into what may happen tomorrow, but you're not entirely sure. There will be times that there's a spike in terms of unprecedented events. And just like the past 2 years, coming out of 2019, who would have thought that we'll be stuck with 18 months of this type of dynamics wherein we're sitting here at home and facing our screens and actually working and studying. So I'm sure you're pretty sick of it already as well. Next slide, please. Now, just to clearly emphasize that when you're a trader or you're a portfolio manager, you are at the most basic level risk takers. So you are decision makers. We will, in all probabilities, result in either loss and or failure at one point or another. So that's something that you need to accept. At one point, you will be wrong. At one point, you will take loss. And that at first could be scary, especially that you're dealing with assets that are not your own. When I was starting, that's something that I needed to sit down and really meditate on. And okay, this is money that I don't have, that I don't own, and I am taking the responsibility of risking it for them. So again, that's where the fiduciary duties comes into play. Now, risk-taking, yes, involves taking positions, but can also be expressed in several other ways. So it's not just buying and selling. Risk-taking can also be in the form of expanding the investment universe, really introducing different names, different products, new asset classes into what you would deem as your investment universe. So if you're a trust institution, you could introduce new names, new products, new sectors, new geographies that you think that clients here in the Philippines would be able to benefit from. Now, risk-taking can also take the form of innovating through product development. So fund creation, bundling products, etc. So I'm taking here an advanced level of not just buying and selling, but really as people, entrepreneurial part of the business wherein you want to grow the business. And that's part of risk taking as well. You're focusing on different and challenging client segments. That's again another form of risk taking. So if you're a trader or if you're a portfolio manager, that's also part of the job description. You're talking to different clients, and what type of clients do you think would you'd be able to help, and you have the expertise to really bring out the maximum benefit for their portfolios. All of this can be considered as part of the job of being a risk taker. Now, while daunting, our job is very rewarding in the sense that you have the breadth of discretion in your control. This is one of the jobs wherein you have full decision making. Of course, you have limits, but at the end of the day, it's your mind that's working. It's not necessarily your automatic mode. But then again, you have new information every day. It's an exciting, dynamic industry to begin with, because it's really you expressing what you think are the optimal decision points on a given time frame. So again, for those who are looking to get into a profession wherein you have so much discretion at your hands, then I think this is one of the things that you should be considering. Next slide, please. Now let's talk about what actually is risk. So just to classify what this is, there's what you call downside risks. Traders in proprietary banks have budgets to meet, and portfolio managers have benchmarks to beat. So these are the things that these are the two types of risks that will be encountering. So downside risk, for example, on an absolute basis, for if you're a trader, you'll be given, let's say, a junior trader would be given, let's say, a 50 million budget for the year. So meaning you have to meet, you have to be able to trade the market, the specific asset class that you are handling, and be able to use the capital that is afforded you and to gain a net income of around 50 million for a junior trader. So again, that's what we call an absolute risk. Of course, you have downside risks as well. So of course, a 50 million budget to you doesn't necessarily mean that you'll be able to meet it. And I've trained and groomed a lot of traders that at the onset, just 1 month in, down 10 million, down 15 million, as they're looking at their budget, man, freaking out already. So again, that's what you call downside risk type, an absolute downside risk. So you're talking about absolute levels when it comes to peso or dollar budgets. Another form of risk is what you call underperformance risk, meaning this are relative to a specific benchmark. So this is more on the side of portfolio managers. So for example, you're handling an equity portfolio. You are handling an equity fund. Here in the Philippines, most likely your benchmark is the PSEI index. So if the index is up 10%, you are expected to at least be at 10% or above that net of the fees that you are gathering from the fund. So again, just to give you a picture, ito yung mga key performance indicators of portfolio managers. Sometimes it's relative to the benchmark. So you either have an alpha, meaning you outperform the benchmark by 25 basis points or 0.25%, 50, 100 basis points, really depending on the risk appetite of the trust company or the fund management organization that you are in. So again, that's a bit. It's very similar pressure, and I've been in both ends. I would say that the stress and also the stress and reward system is pretty much similar, although it's more fast-paced on when you have an absolute level type of risk that you're considering, especially that as you move higher in the ranks, the larger your budget is. So later I will be discussing that as well. So hopefully this differentiation of risk, particularly downside risk and underperformance risk, as well as upside risk, is something that it's more clearer now at this point. Next slide, please. Okay, so what is risk management? So let's go through the boring part first before the more exciting one. So when you say risk management, part of it is identifying risk. So it's not necessarily about eliminating risks. Because again, a modern portfolio theory without risk, without adding risk, you won't be able to increase your expected returns. So for those trading in treasury functions, risks are identified on an asset class basis. So most of the time, that's how you are assigned to. So ikaw, ito management trainee, dito ka muna sa local government securities. You are assigned in the dollar credits, Philippine sector. You're assigned in the dollar credits on the Indonesian sector. So again, those types of identification. That's why most teams are categorized by their asset class exposure. That could be currency, rates, credit, derivatives, etc. So each treasury department would have different niche products, and it's really more tied into the leadership as well. So what are the risks that they would want to identify and really want to participate in? And it's really the head of trading that would set that direction. So some of the treasury departments here in the Philippines would want to be as comprehensive as possible in order to be able to cater to the whole spectrum of the needs of their clients. So of course, the more comprehensive your products, the wider the breadth of your of the clients that you could cater to. But at the same time, it carries with it more risks that are identified. And at the same time, more manpower, more more prideful traders to employ. So yeah, it's really dependent on the leadership that you will be subjected to. So and that's a part of the risk management process, identifying and not necessarily eliminating the risks. Second part is analyzing what's the probable effect on the bottom line. So it's not necessarily you're not just adding to the investment universe or the products that you would want to get into. It's really how does it affect the bottom line. So it's not just expanding your the risks that you want to take for the sake of it. So what's the probable effect on the bottom line? Do you have the expertise to begin with? So do you have the skills? You have the leaders in your team that could be able to identify the opportunities in a specific identified risk that we were discussing earlier on. Now there's also what we call part of risk management is risk acceptance. You would want to prioritize and rank again the asset classes or the risks that were identified and analyzed. For example, here in the Philippines, there's that clear emphasis, of course, on government securities, on treasury deposits. Given that it's the largest market, you're catering to institutions that are mainly trading government securities to begin with. So there's that prioritization. But then again, as you become more comprehensive in your product list, you try to accept more and more identified and analyzed risk in your team. So that's also part of it. So of course, there's prioritization, and there's also ranking of risk. And of course, the higher the prioritization, the higher the budgets are tied to it, and the higher the expertise that's needed to it, so that you have more manpower there. You put in the best guys in those things that you are prioritizing it. And after that, part of risk management also is mitigation. So you've identified it, analyzed it, you accepted, you prioritize the risk exposures, then you try to at this point, mitigation is you set limits, meaning you anticipate, monitor, treat, and then repeat. So these are the things that are always in the minds of those, of course, risk takers are also partners with those that are monitoring risks and keeping an eye on the trading floor. And also when it comes to fund managers, you have your risk and compliance departments, more of support and not necessarily a police per se. So that's a very negative way of looking into support groups. But they are there to really, for their namesake, support you in your trading and risk-taking capabilities. So anticipate, monitor, treat, and repeat. So again, that's part of the risk management process, if you will. Next slide, please. Okay, so we're done with the boring stuff. Let's get into the principle. So actually, what I want to really leave you with you today, guys, is really not necessarily on specific strategies. Right? You buy options, you sell specific derivatives to hedge a product. So no, we're going to look into the principles that I think are the best ways to really mitigate or manage risk as a trader, as even on a trading portfolio. And when you say trading portfolio, it's not necessarily just on the day trading for treasury deposits, but portfolio managers are also traders at the onset, although their time horizon is much larger. So these principles are applicable on both types of traders. So next slide, please. Okay, so first principle or strategy, if you will, is what I call acclimatization. You have to get used to it. So what does acclimatization mean? Big word, diba? It's the beneficial psychological adaptations that occur during repeated exposure to a hot environment. So it's really getting used to the market riot or the volatility in the market. And that's part of it. You would want to really get to know the markets that you are in. You acclimatize, meaning you get used to the weather. You are, again, you're risk takers. You would want to be able to get used to exposing yourself to probabilities of loss. So just to explain this further on the next slide, let's look into a discussion on weather versus climate. Next slide, please. So just to emphasize on this point. Now, how do you differentiate the weather versus the climate? So the climate is what you expect. Weather is what you get. So try to visualize weather versus climate on the financial markets and really the risk markets in general. Now, weather is day-to-day information of the changes in the atmospheric condition in any area. So this is what we experience on a day-to-day basis. You come in the morning, you open your eyes, you look at the markets. This is what you experience. You can go down, you can look at what's happening in the US or developed markets overnight. And then you know that in one way or another, you already feel now, okay, this is what's going to happen. Now, when you talk about climate, this is the statistical weather information that provides information about the average weather condition of a particular place over a long period. So climate is in a way what I would align with the statistical approach of trading or portfolio management. So a lot of times, we look at historical, what happened in history. So climate in that sense is like that, meaning you know the average, you know what to expect, you know the seasons, you know the amount of rainfall that could happen, how hot it could get on average on a certain period. But when it comes to weather, when it comes on a day-to-day basis, in a sense, you don't know what's going to happen. Sometimes it's going to rain, then suddenly it rains more than you expected, more than the average. Sometimes you know it's going to get hot, but then and temperature suddenly rises and something that gets him uncomfortable. So the same thing happens when it comes to trading. Of course, there's a climate that you know the market, you know what's going to happen, you know what the history behind the movements that we've already seen. You know that COVID did this, you know that the additional QE in the US did that. But then again, you never know what the weather would be on that day. So so in that sense, you would want to have a firm grasp of the climate. You have to study what happened before, given this particular factors, given this seasonality. But then again, you have to be prepared with the weather for the day, with the weather for the week on the short term. Now, changes in the weather condition can be observed very quickly. And that's the thing. When it comes to climate change, and that's again one of the big themes that are out there, changes can take a long time. But then again, I've been in the industry for 15 years. I would say there has been a seismic shift when it comes to the market climate. So just look at overall interest rate levels. Before, you could expect 4 or 5% on short-term yields. Right now, you're getting what? Before, it's unheard of that a huge chunk of the fixed income market is at negative territory. So when I started, 2007, right before the financial crisis, fixed income, tapos may negative yield, but that's a new thing. So in a way, in that sense, the climate of that particular asset class has changed as well. The rise of technology stocks and these types of unicorns and really dominating the market capitalization for even markets as advanced as the US market. Again, that's in a way a climate shift. It's a long time coming, but then again, they are in a way averages that changes over time. Unlike what you're seeing on a day-to-day basis, it's very easy to observe. Okay, this is what happened yesterday. This is what happened just a week ago. But then again, I'm just looking into this type of strategy or principle that you want to acclimatize yourself on both areas. And the weather here in the Philippines, the climate here in the Philippines will be very different from the what you're seeing on the Asian perspective, or on the US market, or on the European market, on China, these large markets that are in a way part already of the investment universe here in the Philippines. So again, the learning curve is so steep that even myself, I would find myself just barely on the summit of some of the paths or the sectors or markets that are out there. So yes, I have a few expertise here and there. I would say that I acclimatize myself on specific markets, but there is such a huge knowledge gap, I think, and that's not necessarily a bad thing, but again, it's a challenge for me, especially if I want to grow further. And for you guys, let's face it, you guys are all, for lack of better term, you're idiots in the market at this point. But yeah, that's in a way, that's a form of humility. Okay, I know this guy is telling me that there's so much to learn, and that's an exciting part of the job. If it's so predictable, like the weather, which it's not, then it's going to be boring. But again, this is what keeps us really excited with our profession. All right, so I think I've run down this this slide. So let's move on to the next strategy. So hopefully you got already what I'm trying to squeeze with that illustration. Now, this is very simple, very straightforward. Know and stick to your limits. Okay, so when you talk about this limits, this will pertain to several aspects of the investment process. Now, you have what you would call absolute levels. So limits can pertain to the investment universe. So meaning, as a trader, for example, if you're given this assignment, you focus on the assignment. You don't if you're trading government securities and that's your limits, don't trade currencies. You don't look at other products. So yes, you can study it, but again, when you have your limits, that's where you move, and that's where your leaders will be deciding on. You have their expertise, or they want you to grow in that area. So this could also pertain to concentration limits. So meaning, for example, for fund managers, we have limits on investment grade exposures, non-investment grade exposures, government security exposures, non-government security exposures. So again, these types of limits can be very absolute in the sense that these are already set, meaning it's something that you just need to follow. Now, these limits, the same way with the process that we discussed, are part of the things that are discussed on the leadership level. So again, they've identified the risk. They want, again, on the outside, they would want to monitor and be able to prioritize and rank the risk. So as junior traders, that's where you're going to be starting. Then you have to know and you have to stick to your limits. Now, on a relative basis, like what I mentioned earlier on, there's also risk of the relative exposures that you have. So for example, you're handling an equity fund, and there's a limit there that you could only invest in 20% of non-index names. So again, that's part of knowing and sticking to your limits. Now, limits can also extend to both trader and portfolio management functions. And I don't want to bore you with all of the details, but then again, this is in a way the best strategy to begin with. This is more of a prevention. If you find yourself reaching already, it's too late. What you would want to is really to be always on the knowing your limits and always having in mind, okay, this is how far I could go, and that's really one of the best risk management strategy. And it's really prevention is better than cure. If you're on the cure part, especially in our profession, your job is on the line already. So again, you would want to be able to know and stick to your limits. So don't be a hero, even with the highest convictions, meaning, I know I'm going to be right. I know I'm going to make money out of this. Sobrang inaaral ko to. Again, it's never a good idea, never a good idea to go beyond agreed upon limits. Because there's an agreement there. If you're given limits, you agree to it, you stick with it, that's it. There's no compromising in that area. And that's part of the integrity of a professional. No compromise, especially when it comes to limits. We're talking about limits already. Okay? Sorry. I just had this talk with a junior trader just earlier this week. All right. Okay. Next slide. Next strategy. Know at what point you are wrong. Aha. So this is again a hit on those that are looking into getting into profession. A certain amount of humility is very much required.
Paul.
Hi everyone. I think Sir Ricky is just having some technical problems. In the meantime, I'd just like to emphasize again what he was saying earlier that and I'm actually thankful that he was sharing that there are different places where a trader could be, and he emphasized that you could experience that in the buy side, in mutual funds or in trust asset management. And for traders, you would mostly be holding or managing the execution of instructions from the portfolio managers. While if you're on the sell side, you will be mostly in the treasury side of things. You have a budget and you need to meet targets when you're performing your duties as a trader. So I think that's a very good point to clarify. Earlier, you've gone with Miss Cristina. She's actually more on the buy side of things with Sun Life. And as Ricky has shared earlier, he has managed funds from both buy side and sell side. Ricky?
All right. Oh my, sorry. Apologies for that. So yeah, intermittent internet. Okay, so let me just dive into where I left. I think I lost a minute there. Okay, so know at what point you are wrong. So hopefully I can just dive into this again. Okay, they say that self-awareness is a superpower. So again, it allows you to step back and assess if new information would render your current position unsustainable. So you have to have that point wherein, okay, I am wrong already, meaning all my analysis, at this point, I think I'm taking on too much risk already. Now, before taking a position, it's best to ask yourself, like what I mentioned earlier, and actually have someone to really check on you. When are you wrong? I mean, when will you be able to say now, okay, this position is something that I need to cut already. I really need to take off from my position. Now, great mentors would ask this and hold you to it if the market goes against you. And like what I said earlier on, the market at one point or another will go against you. Same thing as the weather. You might plan ahead your beach trip, but then again, if the weather says, okay, this is what I'm going to be, then there's nothing you can do about it. The same with market events, whether it be on a day-to-day event or there's a seismic change on the climate of the market, then again, you have to be able to pinpoint that this is where I'm going already. Now, you've heard of the saying, so I think this is a very funny illustration. Don't get married to your position. I tried to dissect further. What does that mean, and how does it apply to myself? I'm a married man. I have a 4-year-old son. Actually, it's his birthday today. So there's a party right after this one. So by nature, when you talk about marriages, it's going to be much messier than any other breakup. Of course, you've seen movies, you've seen sitcoms, telenovelas about breakups and marriages failing. Now, it would drag on much longer than anyone would want it to be. It's so much more costlier. Diba? Kaya may mga prenups, all of this stuff with lawyers, etc. More people are affected. So imagine if I could just imagine if something happened, there's a fallout between in my marriage, then it's not just going to be me or my wife, it's just the whole family, so that is our children. But the emotional toll is at times life-threatening even. Sakit. Masakit siya sa puso. And parallel to the trader's mindset, and you see how making this saying makes a whole lot of sense. So a lot of times when it comes to taking on positions, although you don't say it, you get married to a position, meaning you have that emotional commitment that you're sticking into. Now, other less committed relationships, when it goes south, and you would want to end. On the other hand, these are more manageable. So again, my point really is to have that strategy and be able to say that at this point I am wrong again. I'll just have a few minutes, actually just 1 minute from now. Next slide, please. One of the more practical ways to manage risks. Next slide. Gladys. Is to journal. Okay. So again, this is some would say tedious, but as you move along with your career, writing down every action point, every trade, the triggers that let you make that trade, the risk that you would want to take, the losses, and how did it end. Journaling in a way helps you go through with the whole process and be able to grow from that process. So like when mentioned, your acclimatization, knowing when you're wrong, these are the things that could fill up your journal. And again, this is one of the tools really for you to grow faster when it comes to the learning curves, especially as you move into different sectors. So yeah, I think I've spent my time. Hopefully you've got a lot of insights already from this talk, and we'll open it up for questions. Thanks, everyone. Oh, okay, sige. No time again. No time to discuss that. Turning it over to you, Gladys.
So to moderate the Q&A part of this session, may we please call on Ms. Gladys Guelas, CFA, Banking Book Trader.
Hi, everyone. Hi, Ricky.
Hi, Gladys.
That was a very insightful talk. Actually, I'm also coming from a trading perspective, but other than that, I was actually beforehand a risk manager. So I was actually explaining to the students earlier that you really had the breadth of experience, both from buy side and sell side, and it shows that being a trader, you get to experience different perspectives. It's not only coming from you're in a bank or you're in a trust fund. So it's very, very wide breadth. Now for our questions, I encourage our students to type theirs in the chat box.
Yes, please.
And also any reaction to our distinguished speaker, that would be very much appreciated. Just to begin, I just like to circle back on your quote from Warren Buffett, that risk comes from not knowing what you're doing, and that you've also mentioned that it's acclimatization. I know there's this saying that if you're not prepared to handle the heat, get out of the kitchen. So some misconstrue that trading is a very easy role, perhaps game, easy lang, ganyan. But given what can be at stake, discipline and focus is really important. And you've discussed that. What do you think does a student need to do to imbibe that kind of discipline and focus?
Yeah, okay. So I think one of the things that are most discounted at the start is really experience. There's no shortcut to it. Of course, you have young traders that could possibly have like a few months or a few weeks of good trading, but then again, experience is what you would want to accumulate. So experience is not just necessarily being able to do the trades, but really positioning yourself to be beside more experienced traders and really learning from them and having that humility. Okay, this guy has been through several climates or several weathers, if you will, and they would know in a way how to react and how to position themselves on different scenarios. At the onset, when I was starting, there were days na I look at my boss and you could see they're losing positions at one point, and you have your winning positions. looking back, it's one of those very immature ways of looking at. I think I'm better than them. But when it comes to experience, I have 15 years behind me. I think that's one of the things that would really thicken your skin emotionally, and at the same time gives you the humility that I could be wrong. But on average, as I maintain my discipline and learn from what I'm doing, that's why my last point was really journaling different steps. I think that's what you would want to accumulate. Accumulate experience by doing things. Don't be afraid to take on risk. I remember one of my bosses, papasok yan sa trading room. And nakita niya na yung risk books namin, very small risk. So we're taking positions but very small. Sisigaw yan, are we mice or are we men? May speech siyang ganyan. And of course, parang his point really is na you're risk takers. You take risk. You don't dip your toes. There's no toe dipping. There's no washing of hands on the water. You have to swim. You have to be able to take on risk. And you have to be able to experience these things. Kasi yun yan, that's one way of accumulating this experience. So yeah, hopefully I answered that question for you, Gladys.
Actually, you've been very on point there that it's very inspiring for our students to know that they don't necessarily have to do or know everything already, that they really have to build experience. Actually, I was taking notes earlier and I really appreciated that you shared with them that you also began with having little idea of financial products, that you
Zero.
experience. Talagang, diba? You just have to learn and go through it. And the students have to realize that even for any other role, you just have to go through it and get experience.
Yeah, and take your CFA.
Rick is recommending to get the charter.
Actually, it's I think one of the makers of my career when I took the CFA. It's actually my second college degree. You find it funny na the first balance sheet that I've been able to read is on the CFA level 1 reviewer. In college, I was really avoiding math for some reason, but then I wasn't really fully aware of the aptitude I was hiding behind when I was in college. But of course, main point here is this is a learned skill. Everyone has to start at one point or another, but I think I was in a way the learner's mindset is what I think I was able to bring in when I was starting, and that really just snowballed into to this career. Quick story. I took the CFA 7 times. I took level 1 twice, level 2 thrice, and level 3 twice. That's how persistent I was, and that's how of a dunce I was when it comes to the investment industry. But yeah, right after that, I knew that I had the thick skin already. I knew I wanted to learn. I wanted to go up in the ranks, and it panned out really well.
I think can I get a round of applause from our students just for our speakers' persistence, because really not everything comes easy to anyone, and it just have to put some work into it. So we have a question from our students. What separates a retail trader and a professional trader in terms of risk management? If you can share your view on that.
Okay, so I was discussing this a few years back, I think. Would you manage your own money the same way you would manage the funds that you are taking care of? Almost most of the time across the board, even the bosses, their answer is no. It's very different. Risk management when it comes to handling your clients are really, in a way, it's set up in the sense that you have an agreement, a fiduciary agreement already with the client. There has to be discipline, there has to be limits. When it comes to retail traders handling their own money, of course, you could set up your own discipline, you could set up your own risk limits. But then again, you have when you're a professional trader, you have the whole institution, you have your regulators to look into, you have your team needs to look into. It's not just one head. It's a team effort, and that's one of the things you have to consider. That even if you're a trader, you have your own budget. It's not necessarily you're a sole. You're going solo. You're not a lone ranger, if you will, on the trading floor or in the investment team. That's why you have your investment committees. There's no Ricky Maddatu committee, and I'm just going to decide. This is my view. There's an investment committee. There's that humility. I could get ideas from the equity guy, even though I'm the fixed income head. I could get ideas from the liquidity manager, even though this is my asset class. I could get ideas as a FX trader from what the bond trader on the corner there is saying. So it's a team sport. And again, that's part of the differences when it comes to being a professional trader. Especially compared to a retail trader or a personal trader. Follow-up question was is the pressure the same since the retail trader is spending? No, more pressure on your own money. That's your money. It's not someone else, but the pressure, I think, is really on, if you want to keep your job, you want to be able to fulfill your duties to your clients. And again, we're always client-centric. If you're a trader, you're not you're not self-centric, you're a client-centric. You're always looking into the welfare of your client, and that's how you succeed. It's always a relationship that you're guarding. It's with the client. You don't get married with your positions, but you don't also get married with your client, but you're guarding that relationship as well.
How do you feel about the importance of that, of having a support system, not only with respect to your teammates, your bosses, but also the risk and compliance teams? Actually, I'm very, very supportive of your stance that they're not there to police you, but to support your activities.
Yeah. So the support teams, they're supportive. I mean, you would want to build that relationship wherein you're not always, you don't want to create an environment that they would always be suspicious of your actions. You would want to build environment wherein, the thing is, if you're a trader, portfolio manager, you are a revenue generator. You are the one, I don't want to say it this way, but in a way, you're the engine wherein everyone gets paid. You're the one generating the revenue. And in that sense, they want to support you on your endeavor. That's your job. That's your job description. So in their end, their risk and compliance is there so that the revenue generating units would not be curtailed or would not be predisposed to other activities that are not revenue generating. So of course, I don't want to get into the different scandals that are out there, but on a normal basis, they would want to be able to give you support in the sense that these are your limits. This is what is the regulators are saying. We have to comply and be able to maintain the good relationship we have with our clients as we follow the regulators and the risk and the budgets that are already set.
So I've gotten some important points from your discussion. Maybe just to close and to share your final thoughts with the students. We've gotten, at one point, you will be wrong, you will take a loss at first, and that will be scary, daunting, but rewarding because you will make the decisions, and managing risk should be part of a trader's mindset. But most importantly, don't get married to your position. So is there any other quotable quotes that you'd like to share with our students? Because we've really gotten a lot.
Okay. So actually, if we could go to the last slide that I had with the PowerPoint that I sent. If you're not yet there, look, investing or trading is not nearly as difficult as it looks. So I don't want to sound as if I am a CFA, I'm the head of this asset class. It's going to be difficult, very convoluting yung conversations namin lagi sa trading floor or to that effect. Successful investing involves doing a few things right and avoiding the serious mistakes. So again, of course, there's a lot of competence attached to it. There's a lot of discipline attached to it. But at the end of the day, it's really doing a few things right and avoiding the serious mistakes. It's really about being disciplined on that area. So yeah, hopefully for those that are looking into getting into the investment profession, more power to you guys. I mean, it's a good industry to be in. It's an ever enlarging industry, and could imagine digital banks coming into the industry. You have several tech companies, fintech companies coming into play. Such an exciting industry to be in, especially now for those who are entry. I don't consider myself a dinosaur at this point, but if you look at the developments, the change in the climate, if you will, there's so much room to find your footing in, and hopefully you're very successful in your endeavors. Go into fintech. Go study your CFA, study your programming. Yeah, I could go on and on with what the things that I could say, but yeah, I'm very excited for you guys as you enter the workforce.
Thank you very much, Ricky. I think we have over 100 students looking to follow your footsteps.
Oh, and follow me in LinkedIn. Add me in LinkedIn, just for those guys that are in LinkedIn. And if you're not in LinkedIn, create your account already. I think a good way for me to connect with a lot of you guys also.
Thank you, Ricky. Back to you, Paul.
Thanks, Gladys.
All right, so thank you, Mr. Maddatu and Ms. Guelas. As our token of appreciation, we present the e-certificates. So CFA Society Philippines presents the certificate of recognition to Mr. Ricky Maddatu, CFA, for his valuable contribution as speaker on the topic of managing risks in a trading portfolio at the Philippine Junior Finance and Investment Summit 2021. The future starts now. Given this, the 11th of November 2021, CFA Society Philippines presents the certificate of recognition to Ms. Gladys Guelas, CFA, for her valuable contribution as moderator on the topic of managing risks in a trading portfolio at the Philippine Junior Finance and Investment Summit 2021. The future starts now. Given this, the 11th of November 2021. Okay, so, and then we go now to the... Thank you, Mr. Maddatu and Ms. Guelas. And then if we go now to the game on the two truths and a myth game. So the correct answer is letter A. And congratulations to our winners. If we can show the winners for the game. Congratulations to Joyce Ann Castillo and Chelsea Dario. So please send us a message to our PJFIS Facebook page for instructions on how to redeem your call-funded certificate prize. And then guys, so do not forget to complete the evaluation form for today. Remember that completed evaluation form, so this will be part of the requirement to get your PJFIS 2021 certificate. And we will see you again tomorrow for day 3 of PJFIS 2021 event. The future starts now. And lastly, we would like to take this opportunity to thank our sponsors and partners. So for our platinum sponsor, MSCI Philippines. For our gold sponsors, AP Securities Incorporated, COL Financial Group Inc. For our silver sponsors, Atram Trust Corporation, DBP Daiwa Capital Markets Philippines Incorporations, and Papa Securities Corporation. For our media partners, Business World Publishing Corporation and Business Mirror. And for our event partner, Bureau of the Treasury, the Philippine Stock Exchange Incorporation, and Securities and Exchange Commission. Thank you all, and have a great evening ahead.